Welcome back. In our top business story, 34% of all professionals in the MENA region are considering moving to a new industry, with the UAE boasting the best opportunities in the oil, gas and petrochemical sectors, according to a recent study. The Bait.com and YouGov survey also showed that many professionals are looking to move into the banking and finance sector, IT, human resources and manufacturing, while 35% are content in the industries they are currently employed in, due to appropriate wages, career growth opportunities and job security. As far as local talent is concerned, government civil service ranks first, with 24% saying it is most favorable and popular with local talent. The Middle East aviation sector is set to grow by 10% annually, according to a recent study by Official Airline Guide. The UK-based provider of travel information also showed that the region will account for 11% of the world's aircraft deliveries over the next 10 years, due to the fast expansion of the region's national carriers. The study puts the strong growth down to a rise in tourism, airport development and increased investor confidence in the region. Official Airline Guide is also quite upbeat about India. Its aviation sector is forecast to rise by 9% over the next couple of years. Abu Dhabi National Energy Company, also known as Takan, aims to raise at least $1 billion from a two-tranche bond sale today, lead arrangers told Reuters, to help refinance debt maturing next year. Takan, which is 75% owned by the Abu Dhabi government, last month said it would buy back a $1.5 billion bond maturing in October next year. Guidance for the long 5-year tranche of the bond is set at 3.5% over 5-year US Treasuries and 4.1% over 10-year Treasuries for the portion maturing in 2021. Both tranches are expected to have a size of at least $500 million each. However, two sources said the company was eyeing $1.5 billion from the bond sale. The UAE's two main benchmarks, the DFM and ADX, were down today. Here's a quick overview. Ireland's Prime Minister warns of tough times ahead. This comes as his Italian counterpart, Mario Monti, takes a €30 billion austerity package, a mix of tax rises, pension reforms and incentives to boost growth, to Italy's parliament today to gain back investor confidence. We have Gaurav Kashyap, head of DGCX trading at Al Pari Middle East DMCC, here with us to tell us how the market reacted on those news. Hi Gaurav, welcome.
Good to be here, Linda.
What did the euro do after those news?
Well, we see a lot of positive sentiment coming into the markets after Mario Monti announced that plan you had mentioned. What we can take from this fact is that the markets are very optimistic that a good plan would be announced by the EU summit come Friday. And what we're expecting to see as a result of that is the euro, moving upwards towards that resistance level about 135.50 against the US dollar. We've seen equity markets continue the rally into trading today. And the most important thing is we've seen government borrowing costs, particularly in Italy, dropped to their lowest levels since August, at just above 6%. So judging by the market reaction, plus a good combination of US data coming over the past few weeks, have seen risk sentiments gearing up for kind of like a positive response.
You just said it, there's a summit this weekend with Angela Merkel and Nicolas Sarkozy already today meeting in Paris to discuss steps to solve the EU debt crisis. What are your expectations for the summit on Friday and Saturday?
Well, Linda, this is going to be the largest event driver of the week, along with the ECB's rate decision on Thursday. If I can just start with the rate decision on Thursday, analysts are expecting the ECB to cut rates by 25 basis points down to 1%, as well as the potential of downgrading future growth and outlook downgrades, basically. And this probably will be followed by the EU summit, of course, on Friday, and we'll be following three main themes of this EU summit. First of all, we're going to look at what types of bilateral agreements will be negotiated and announced as a result of fiscal consolidation across the EU. Of course, this is very important for our second point, which is what participation the ECB will have in upping their bond purchase program in Europe. Of course, the ECB needs to be convinced of a very successful consolidation program when it comes to reining in budget deficits, and we'll be watching that. And of course, the third point would be the IMF's participation. There was a lot of rumors last week that the IMF would be channeling up to 200 billion euros through the the ECB would be channeling up to 200 billion euros to the IMF. So we'll be watching these three main points. But regardless of the outcome, the EU must come up with a very bold, credible and transparent plan for the markets to avoid to continue falling into a tailspin.